So one thing Esther George said today was that we weren't going to know where the new things were coming from. So what we've got here are two brand new funds in the scheme of things. TRU Capital, which is Robert Miller and John Gillen. These are new things. These guys have great backgrounds on Wall Street. They're creating value in all these interesting ways. So instead of having a panel, we thought we might break it up a little bit, and we're just gonna let these guys tell you a little bit about their companies.
How's it going, guys? My name is Robert Miller, founder of TRU Capital. I'm here with my partner, John Gillen. And before we get into kind of what it is that we do, I'll give you a little bit of background on myself, then I'll hand it to John, and then I'll sort of tell you what the fund is all about. I do not come from the traditional path. I didn't go to Wall Street, didn't do that whole thing. Was studying finance in college, though, but found Bitcoin during that process and found trading during that process. And my whole claim to fame early on was flipping about $1,500 into $250,000 in 3 months while in college, just from my laptop, just from the classrooms. And so that completely changed my paradigm on what finance really meant. How could I even do that? I wasn't trading penny stocks or anything like that. It was just understanding crypto and going down that rabbit hole. So quickly got into really wanting to understand trading. So I went down this whole rabbit hole of algorithmic trading, personal trading, long, shorts, everything, and navigating crypto as it evolved. Some of the exchanges that I traded on back then aren't even around today, as crypto has gone through many changes. Obviously, he brought up FTX, but before FTX was even around, there was also Cryptopia. I don't even know if you guys know that one, but that's an OG one. And obviously, the space has grown up and has changed a lot. And really the foundation of TRU Capital came from my experience then, which was near 7-8 years ago. And then flash forward, it has become something pretty exciting. But with that, I'll pass it off to John just to go over some basics.
Well, hello, everyone. Thanks, Heidi, and thanks to the Digital Asset Exchange for hosting us. We're really happy to be here. My name is John Gillen. I'm in from New York City. So my journey was a little bit different than Robert's. I went more the institutional track. I spent 6 years at BlackRock on the Aladdin platform in client services and relationship management. So I worked a lot with the leaders of a lot of the major Wall Street institutions and learned about how they think about investing, the language of risk that they use. While I was there, I was very interested and passionate about digital assets and crypto. So I worked a lot with our digital assets team. I helped out on the integration that we did with Coinbase and the Aladdin platform. And I worked on several other projects internally. But I was looking for a way to go full-time crypto, and I couldn't really find the right fit for me. Going to a crypto native firm just didn't seem like the right opportunity. I actually did get an offer from Celsius before they went bankrupt, so I'm glad I didn't take that. But I've been searching for a long time for a way to kind of bridge this gap between the crypto native world and Wall Street traditional investors. So that turned into TRU Capital. And for me, a big differentiator for this fund was just that. What differentiates us from other offerings? So Robert and I spent the better part of a year making sure that every layer, every aspect of the stack of the offering had institutional grade compliance, security, and returns. And so we'll tell you a little bit more about that. But outside of BlackRock and digital assets there, I've also been in education and crypto and digital assets. I've written for a lot of major YouTube channels and just generally been involved in that. I took a class on the economics of blockchain and digital asset at Wharton School of Business. And so just, yeah, that's kind of been my path, is a little bit of Wall Street, a little bit of crypto, and that's how TRU Capital came about for me. So glad to be here and looking forward to talking more with you all about this.
Yeah, sure thing. So there's a third partner. He's not here, but he was actually the person who got me involved in digital assets. He's a bit more on the traditional side as well, been in financial services for 15 years. Got to give him a little bit of a spotlight since he couldn't make it with family. But really what we started to do in 2023, this is after the FTX collapse and all that kind of stuff, is create that structure. So this is really when John and I got together and we said, hey, you know what, let's stick it out here in the States. Let's create a Reg D 506c3c1 fund and help family offices and accredited investors get involved. And so with 2024, trying to figure out which president was going to get into the office, we didn't really raise too much during 2024 because we were actually contemplating going offshore and doing stuff in the BVI in Dubai. But with current legislation and the regime in place, we decided to stay. So here in 2025, we started our marketing efforts. So maybe you guys have heard of us, maybe you guys haven't, but we're really focused on helping family offices really bridge the gap and have a trusted partner that's digital asset native. There's a lot of people in this space that are approaching it from traditional finance, and while that's great, there's something to say about being digitally native and fully understanding the ins and outs of how to even spot some of these projects, because I think there's now millions of coins out there that really don't provide any value. There's really only a core set of things that we look at. And so what makes us different, though, than just being a long-short hedge fund or just a buy and hold fund is we tie in those strategies similar to what Gamma Prime was talking about, trying to de-risk and give different types of exposures to make our offering unique. And that is that we have accumulation of Bitcoin, accumulation of projects that we really like, whether they're L1s, L2s. And then we participate in markets long and short, but then we have algorithms that backstop the fund. And so right now, I didn't tell you guys, but I have a company called Algo Alpha, and so we create these different types of algos all the time. But we have currently 6 algos right now. They're each used in different market cycles. Some are used in bull market cycles, some are used in bear market cycles and ranging cycles, and then we have some built for different markets. And just to kind of show you some of the returns of that, if you had just bought and held Bitcoin over the course of a couple of years here, or I'm sorry, this is one of our alternative positions, my bad. If you bought and held Bitcoin during the time of some of the alts rising, you would have missed out on a lot of alpha that was currently in the market, and that's just buying and holding. So everyone can do research and find coins, but really our claim to fame is the algorithm side. So over the course of 4 years, our algorithmic trading generated a 3,410% return, whereas buying and holding Bitcoin over that time was 60%. And so that's also a combination of, or that's a separate side of returns outside of the tax loss harvesting that we're able to do with accumulating Bitcoin and selling it as it's going down. But the point is that this is the alpha that gives the juice to our fund. And this is where I geek out. I love algos, and as I said, I started trading pretty early on, so this is really where I focus, whereas he really focuses on the institutional adoption coming on chain and what projects are really going on. This is what some of them look like. If you guys haven't seen algorithms trade before, they're pretty cool. They're pretty hands-off, and some of ours are just indicators, but most of them are hands-off trading that actually do execution in the actual digital asset markets. Then we have some also for futures and that stuff, but mostly this fund is digital asset native with digital asset algorithms that are actually trading in these classes. We have them third-party audited. We have different CPAs signing off on them. So that's just to kind of show you we're not just using ChatGPT to throw up some code together and have it actually run. This has been running for quite a while on the return side. And then here are just some of the returns of our manual trading. So like I said, we're doing multiple things. It's not just buying and holding Bitcoin and hoping for the best, or buying and holding some of these alt projects. We've layered in these other aspects to help juice returns and help give our investors a bit more exposure and actively participate in the market. So that's a bit of what it is that we're doing. We have plenty of resources. We're here not just to be a fund that you guys can participate in, but also to provide education and resources. So we have podcasts. We have stuff actually with Grant Cardone's brother, Gary. Cool cat, if you guys don't know who he is. But he's fun, and so we're just here to answer questions and obviously be able to give you guys some insights as to what algos are doing and how this all works. So, you want to add anything?
Yeah, sure. So something I'd like to add to that would just be we have a custody relationship with BitGo to provide our custody solution for the assets that we're custodying for our LPs. The reason why that was such an important part of the stack for me is that a lot of people can get returns. A lot of people can get leverage. A lot of people can go out and take a lot of risk in the market and get you a return. The goal here for us is to not fumble the bag. I think a big mistake that a lot of people make in digital assets, and why I think family offices are looking for a partner, is that there are a lot of predators and pitfalls, and there's millions of coins and assets that don't necessarily, haven't really found product market fit, don't really justify their existence yet. And so what we do is we do the institutional grade research to physically go and build relationships with the people who are building these protocols, talk to them, understand the technology, understand the value proposition, and then when we actually bring in capital, we're not just running this out of a hot wallet. There's this famous hack of the Bybit exchange that their hot wallet got hacked for several $1 billion of Ethereum, and there was nothing they could do to get it back. That's not going to happen to us. Our assets are held in cold storage by BitGo, which has the longest track record of custody solutions for institutions in digital assets without a single security risk or error. I actually think it's the same company, the custody solution that the president's using for his project. So it's literally presidential grade security. And so that was an element of this stack that was important to me, right? So the other thing is, like I said, leverage. There's an old joke that the quickest ways to go broke are ladies, liquor, and leverage. And I think a lot of people in digital assets get very much over their skis with leverage and then wind up losing their position. That is not what we want to do. We want to participate in this asset class and partner with capital that understands the value proposition here and wants to be exposed to this for the long term without, like I said, pitfalls and predators. So we're not trying to outsmart the market. We're not trying to say that, nobody can do this. The idea here is to prioritize security, compliance, participation in the market, and then like Robert said, the algorithms are our way of juicing the performance to make sure that this is the best offering on the market for an institutional grade investor who wants to participate. Now, what do I mean by best? There's going to be a proliferation of different ways to get exposure to digital assets and to get returns on those digital assets to get yield. So you're going to be able to get yield on your Bitcoin from Aave or from JP Morgan or from anybody else. Michael Saylor will be very happy to take your money and buy Bitcoin with it, but he's going to obliterate your value as a shareholder by diluting your stock. We're not going to do that. We're going to custody the Bitcoin. We're going to get a bigger bag of Bitcoin, and we're going to defend that for the long term as this asset class goes from a $600 million to a $4 trillion to a $100 trillion asset class. That's the vision that we have for TRU Capital. That's the long-term plan that we have, and that's why we took the time to spend over a year putting together all the different pieces of this, and why we think it's a differentiated offering on the market. So I guess any questions or anything else you want to add on that?
Yep. Anybody want to jump in with a question?
One back there. I have a quick question. So earlier there was an open ask of everybody showing hands who has crypto at the box. I was surprised not many raised their hand, but at breakfast apparently 70% of the people did. My question to you is, how do you help investors, family office folks? How do you help them get over the psychological? What's the biggest barrier to account?
For getting into digital or getting into algorithms? Just getting into digital?
Right. So the question was, there's a lot of people maybe even in this room that haven't really got over that hump of how do I get into digital assets. So how do you help them, even if it's from a psychological standpoint, get over that hump?
Yeah, so I think our takes might be slightly different. I think most people think digital is mostly just like a features and benefit conversation. Like with banks, for example, they can control their operating costs by tokenizing things, right? The product's still the same, but it's more of an operational efficiency. And I think a lot of the digital assets that are being built now sort of compete there, so it all kind of sounds the same, where this has a faster TPS, or this has more compatibility with more networks and stuff. And so I think that the biggest reason why family offices haven't gotten involved is because they're hearing people compete on the message that doesn't even resonate with them. They could care less if it takes 10 minutes or if it takes 2 seconds. I mean, they just want to be on the winning horse. They don't want to lose money, right? So I think there's a big just language gap that's happening between them. Even though there's great innovation, I think it's really just software nerds versus people that made their money elsewhere, right? And so I think that's just the biggest gap. What we try and do is simplify it. Number one is these are the different sectors. Here's the trends in each sector. Some are still in development. Some are happening at a more rapid clip. And here's how you can partake, and here are the rails to actually do so in. I think not enough of that conversation happens because it's either people get too complex with the legal stuff and just try and make it a little harder for family offices to understand what they're having to onboard into things, or they're just going too technical and too nerdy, and I get bored. I'm like, come on, man, let's wrap it up. So I think that's what's kind of going on, and we bridge that gap there.
Yeah, so I think there's two ways I would answer this question. The first one is that some people are just not comfortable with the idea of a bearer asset, right? Which traditionally, or not traditionally, but in the past, bonds and stocks used to be bearer assets as well, and I think a lot of investors had objections to that too, and so we came up with other solutions for that. Like my dad still has on his wall a certificate from Studebaker, but you know what I mean? We don't pass around shares of Google anymore, right? So I think the custody solution we have for that kind of gets over that hump of not wanting to actually have to physically hold the Bitcoin, but also I don't want to have to hold your Bitcoin either because I don't want to be the target of a wrench attack either, right? So I don't want someone coming after me to try to get my investors' capital. So that's why that solution is better for all parties. The other objection about this of why not digital assets, this is taking this in a completely different direction, but I think that flipping the risk of this asset in the investor's mind, I think is really important. So what do I mean by flipping the risk? The most bullish thing I ever heard in my life in digital assets was presented by a guy named Andrew Ang, who is the head of factors risks for BlackRock. And there was a day in early winter of 2023 where he presented a 55-page white paper he had written on modern portfolio theory and digital assets and presented his thesis for why a rational investor should allocate to Bitcoin. And what he said was that according to his, he had all this fruit salad of all these degrees after his name and was the head of Columbia's business school. This guy was the head of the firm. So he did this presentation for 1,000 people at BlackRock. I went right down in front and listened to it. But he said if you thought that there was a 0.016% chance that Bitcoin reached what he called a bliss state, so in other words, a lasting place in the global marketplace, a rational investor, he said, would allocate up to 20% of their portfolio to it immediately. I'm not telling everybody that they need to full port their whole portfolio into this, but the thinking of it is different, right? Like Michael Saylor says, Bitcoin's either going to 0 or it's going to 1 million. So a rational investor needs to hedge out that risk of not participating in that. So that is the way I would tell people to think about this. Because some people are like, this could go to 0. Yes, but now it's much more likely that a $4 trillion asset class is not going to just disappear overnight. And so I think without being prescriptive as to what that solution needs to be, I think everybody now who wants to take seriously the concept of investing needs to come up with some sort of answer for how am I allocating to digital assets? How am I treating this in my portfolio? How do I feel comfortable getting exposed to that? And so that's something Robert and I work with people on to find what's the right solution for them. That may not be TRU Capital, but I think everybody needs to go through that educational phase of what is this asset class? How does this fit for me? How does this fit into my portfolio? And how do I want to treat this? But I think just starting with that reversal of not thinking of it in terms of the gains that you could get, but the cost and the risk that you need to hedge out that everybody else gets exposure to this and you don't. So that's 2 answers to that question.
All right, I think I'm going to ask the final question. I'm going to be very unfair on this because I'm going to ask you to answer it fairly quickly, even though it may be a somewhat difficult question in that the challenge I've always had thinking of algorithmic trading on Bitcoin is that A, you don't have a lot of history, especially compared to other asset class to really build that, to do that, and then B, you have maybe the fastest, rapidly maturing security we've seen with all the institutional, which throws off the very limited history you have. So how have you overcome that to really create your trading platform?
No, good question. So we don't only do algorithmic trading, but in the portions that we do, each algo that we have has different parameters or different weights. So the one that I would displayed is really for a bear market scenario where Bitcoin is either in a ranging scenario or in a downward trend. There's no one algo that's going to trade all things. 1, to your point, not enough data, but 2, in all markets, there's not one algo that's going to determine that. So you have to sort of take down each scenario, whether that be the 4-year cycle where we have a bearish part on the market, then you have a ranging, and then 2 or 3 years of bull. Or you actually have to look at a little bit more some of the standard trading indicators like RSI and some simple stuff like that. But specifically the one that I showed is acting like a paranoid babysitter. So its whole point is to aggregate more Bitcoin through that dip and through ranging markets. And in 2023, throughout the entire year, Bitcoin was not really too hot. It was funny because I was telling everyone to buy it. Actually, the presentation on the slide there was me telling people to buy Bitcoin. And our algorithm was at 104% return about halfway through the year just because it was doing that arbitrage of just those small price movements. And then Bitcoin ripped in Q4. And so we actually had turned it off because Bitcoin, when it's going straight up, you don't really have to trade it too much unless you're doing long and short. So it's knowing how to use the tool. There's not an end-all be-all cure to one algo having a consistent chart pattern, but it's just knowing how each one of those is designed and using them in the proper markets.
So I just wanted to add something that I think crosses both of our worlds. So in full disclosure, TRU Capital is onboarded onto Gamma Prime, and just so you know, the way that we would vet them is we're like, wow, that's an amazing return. Okay, let's talk to your auditor, and that's it. You just talk to the auditor's like, I do not work for them. I work for KPMG or I work for MG Stover. That's the real return. Done, right? Do you have custody solutions that take the money away from, these, do you reduce your risk from, exchanges? Yes, you have Bybit, just so you know how that works. The money never actually goes on the exchange. They mirror the money and they allow the trading to happen over there. So the money's never directly exposed. So we look at all that and we look at their history, make sure they didn't, they're real humans and that they're reg compliant, and that's good to go. So the piece I wanted to add is, this is what's worth paying 2 and 24. Right? Don't pay 2, please Do not pay 2 and 20 for someone to buy your stocks for you. That's just ridiculous. Please, just go buy an index. Pay somebody 2 and 20 to do litigation finance because that's really deep expertise. Pay somebody 2 and 20 to give you super crypto exposure, 3,000% type of exposure. Or if you want something sleepier, pay them to do, the delta neutral stuff that we have. So the reason we onboarded TRU Capital is, again, because it's not the same thing as everyone else, right? Again, please do not pay Michael Saylor to buy Bitcoin for you. All those digital asset treasuries, why? Just go buy your own coin. In fact, I'm actually short those and long Bitcoin because they're trading at a 1.4x multiple. Why? They're just they should be trading at an inverse. Remember SPACs? SPACs did the same thing. They raised 10 million and they're trading at 11.5 million. Why? It's just cash. And now they're trading at 85 cents on the dollar. So the same thing is going to happen. So this is a product that we would put on Gamma Prime because we're like, it brings a genuine value. It's worth paying 3 and 30 for, frankly, in my opinion, because you can apply a tiny sliver of your portfolio and get outsized exposure to this asset class and just keep the other 98% for other stuff. And when you have something that's generating 3,000% return, it's an order of magnitude more than Bitcoin, you can put an order of magnitude less in, which also reduces your risk. So.
Awesome.
Thank you, gentlemen. Appreciate it.
Yeah, thank you.